Hi guys, welcome back to Investoprime TV. Welcome to the first ever episode of the Investoprime TV podcast. In today's video, we'll be discussing how can you double £100 if you want to invest. How far can your £100 go? And we've got here Investoprime TV himself, and he will be answering that question for us and more questions as well. So stay tuned, get yourself a cup of coffee because it's going to be quite a long, it might be not be too long, but it might be long. So make sure you grab yourself a cup of coffee or a snack or whatever and join us. In today's video, we are going to be talking about investments. So now, Mr. Investoprime TV here, he has been doing a lot of investment videos. He's got a lot of knowledge in terms of how the market works, investing in the right products, making money, that sort of thing. So in today's video, we are going to be discussing if you had £100, are you able to invest with that small amount of money? Is it possible? Like, can you double that, say, 5 to 20 years time?
Yeah, well, I would say that's definitely a possibility. It depends on the strategy you want to go with, and I assume we're talking the stock market. Okay, so one of the strategies for 5 to 10 years that you can easily double £100 or $100 or 100 currency equivalent is through options trading.
Right. And
options trading, it allows you to command 100 shares for a fraction of the price. For instance, if you wanted to buy some like Amazon, which is trading at over $100 now a share, you can't even afford one share with that 100. But if you buy an option, like a call option on it, you can maybe buy it for, let's just assume $20 or whatever. But you can, as the price goes up, you can make a lot of money from that. Whereas if you want to go a different route from options, you can double it, but it'll take easily the 5 to 10 years. But the way you can do that is value investing. So basically you pick a couple of stocks that, well, companies, you invest in businesses, not just invest in the stock market. So you believe businesses are going to do well, and then you put money behind those, you buy those stocks and then you hold them for some time.
Right.
5 to 10 years.
So say, for example, I did have £100 and I wanted to invest that. However, I know it's a small amount, but however, I wanted it to be generating me some sort of income over the 5-year period. So is it possible for me to get that? Is it possible for me to achieve that? Can I get that? Am I guaranteed as well?
Okay. When you're investing within the 5 to 10 years, do you want to take an active role with managing your portfolio, or do you want to just put the money in, say, okay, here's my basket of stocks that I want to invest in, and then I want to check on it maybe once a month, every quarter? What's your strategy and approach?
I think everybody would come with different strategies, I guess, depending on their situation and circumstances. But for me personally, I wouldn't want to manage it constantly because I am busy. I'm working on other things. I'm doing other things. Okay. This is just like, in a way, like an extra investment opportunity. So I wouldn't want to personally be managing it, but I would still want to, I would expect that money to be making me money, because I might as well put that money in the bank. Even though I know in the future it will possibly, well, we can't predict the future, maybe make me some sort of money. But I think in the meantime, I would like it to generate some sort of income, no matter how small it is. So do you think that's possible?
Oh, yes, definitely. And I would even say one of the strategies that I use in terms of options is credit spreads. So vertical spreads, where in a nutshell is basically you pick a spread. So $2 wide spread would equate to maybe $200 max loss, but you obviously get paid for that. So you get money in your account as soon as you activate the trade.
Right.
But the thing with that is, let's say, for instance, you believe the price of a stock is going to go up.
Right.
Within the next month, week, whatever your time frame is, you'd effectively just put a spread. Let's just say the stock is trading at $100, right? You don't believe that it's gonna be anywhere below $100 within a month's time frame. You just don't know when, like you said, you can't predict the market, right? But what you do is you'd say, okay, I want to sell a credit spread of, let's just say, $98 to $96. So that basically means that it's currently trading at $100. You don't believe in a month's time, 30 days time, that it's going to go below $98 or $96, which is your lowest point. So that spread is technically $200. Your max loss is $200.
Right.
But you get paid something on the front end. So out of that $200, you might get paid, because it's very close to your strike, you might get paid $110. So that would go in your account. So your max loss then becomes $90. Do you understand?
Yes.
And that's only if the price closes or if it expires below $96. What's called an income strategy.
Right.
You get paid on the front end. And because we don't know what the market is going to do, it's easier to say or predict that the price is not going to get to a certain level than it is to predict where the price is going to get.
Yeah.
So that is a very, well, I say easy, there's a lot more involved in that strategy, but it's a very easy strategy. You do it for a month. You don't need to look at your charts or anything daily. You can get on with your job. You can sleep peacefully at night, knowing that. And the best part about it is the money is in your account straight away.
Okay, so I understand, and all that makes sense. However, I feel obviously you mentioned about strategies, and obviously that's an income strategy, and I understand. However, let's just take a step back a bit. What if it's somebody new that's new to this whole thing? In their mind, what they're thinking about is they want to double that £100. What's the easiest way? Like, is there like a platform where maybe somebody can manage that £100 for them, like invest it for them and manage it for them? Or do they have to, physically trade themselves?
Well, I would say you can go through different routes. You can, of course, get someone to manage it for you. Those are called money managers.
Right.
And they come with their own fees. So maybe 1% or whatever their fees are, which are usually quite high. But the way money managers, hedge fund managers, all that, and it needs to be someone credible. You can't just get anyone that's you see on an advert from Facebook or Instagram saying, they need to be credible first of all, because it's your own money. Let's say someone that's credible, they're good, they've got a good track record. They'll come with their own fees, and a lot of them would actually just go for the safe bets. So they'll try to put money in things like the S&P 500, so index funds. Right. They'll try to put their money in, and at least you're less likely to lose money or lose your money because it's in a safe investment.
Yeah.
But the thing with that is you're less likely to double your money because there's a reason it's safe, because it doesn't move very much.
Yeah.
So if you want to, realistically speaking, if you have $100 and you want to say, I want to double my money in 5 to 10 years, like you're saying, I would say, and what I do anyway, that's best is for the long term, is try and pick businesses that you believe are going to go. Right. Now, one of the things that if you're brand new, it's actually pretty simple to look for. You can go on to, and I'll leave a link below for like stock screeners. Yeah. You can go onto there, look up stocks that are maybe in the United States, because it's the most sort of stable market, the New York Stock Exchange, all of that, right? Look for those. Look for companies that are got a good return on capital. Right. Because return on capital, in a nutshell, basically shows how well a company is doing. For instance, let's say I've got a company. I purchase some land or a building that let's say it's a shop, right? I'm selling something. So I purchase a building for, let's say, $200,000, right? Now, in that year of that building operating or that shop operating, it makes me back $100,000.
Okay.
So my return on investment or return on capital is actually 50%.
Right.
In 1 year. So if I as a company can show you as a potential investor that I can make 50% return on capital a year,
you can be
pretty confident that I can make you another 50% the next year. So in 2 years, I've broken even, and then I start making profit. I don't need to pay anything in terms of mortgage or whatever on that shop.
Right.
I own it outright. So as opposed to, let's say, a business equivalent shop, let's say I build a shop again, $200,000, but I only make maybe $25,000
Right.
on the first year. It's a lot less in terms of return on capital. So it's going to take me a lot longer to pay off the mortgage on that building. And it's not just the mortgage, I've got other outgoings as well.
Yes. Yeah.
So if I'm showing you that I've got a high return on capital, that means that I'm somewhat a safe business, right? So let's say my stock is currently trading at $10, right? And I've got a high return on capital. This basically means that I'm undervalued according to the market.
Yeah.
Now, we all know that we don't know what the market is going to do in the short term, but I can bet you with a high degree of accuracy, you can predict what it's going to do in 5 to 10 years if you buy a good business.
Yeah.
So if you invest into my business that I've got a return on capital of 100,000 a year, and it only cost me 200,000 to buy that or to mortgage out that shop, then in 5 to 10 years, you can best believe with a higher degree of accuracy that you've invested into a good business.
Right.
And that business, my business, is going to be getting you a good profit. And the best part about it is that the market will eventually catch on.
Yes.
They'll be like, rah, this is a good business. Yeah. So invest in a good business. If you have $100, invest in a good business that's undervalued. And there's ways to find out if a business is undervalued and if it's a good business. And if it's something you guys are interested in doing, then make sure you leave a comment below and I'll definitely get back to you guys and help you guys with that.
Yeah.
So I hope that all made sense. It might have been long-winded, but I hope it made sense.
Yeah, I hope it made sense. It certainly made sense to me, and I think those were some good points. And I think you pretty much answered my question, which is ways that I can invest, because not a lot of people have got a lot of money. So say you've got something as little as £100, how far can that go? How much money can that make you? So I think you pretty much answered my question. So if you guys enjoyed this first podcast by Investoprime TV, so it's basically Investoprime TV podcast, that's what this session is called. If you enjoyed it, make sure to leave a comment and let us know what you would like us to discuss in the next video, and we'll see you guys in the next one.